there's obviously echoes of the dot-com bubble in this moment. All right, and let's take a step back. The dot-com bubble, there was a huge amount of capital that flowed into what today we refer to as the internet. Now, the true winners and losers were not readily identifiable at the start of that whole bubble. But move forward 10, 15, 20 years later, there's no doubt that the world was radically transformed by that moment in time.
All right, that's Ken Griffin. Now let's welcome in FundStrat's Tom Lee, a CNBC contributor. It's good to have you back. I know you love this trade, but what do you make of what Mr. Griffin had to say?
Well, I agree with him. You know, we're in a period where there is a super cycle and exponential growth opportunities within AI, but it doesn't mean every company that has elevated valuation today deserves to actually have the capital, and that company may not even reinvest that capital properly to be a survivor. So I agree there is going to eventually be a shakeout, but I think valuations, strangely enough, are actually pretty reasonable today compared to 1998, because, you know, 1998 was that liftoff point before that final 18-month surge. And I'd say the best benchmark is NVIDIA trades at 26 times forward earnings. Cisco at that same exact moment was at 60 times, and Cisco's PE peaked at 210 times forward earnings. So NVIDIA, to me, is still a bargain at 26 times. It's cheaper than Costco and Walmart, which are close to 50 times forward earnings.
Sure, but all valuation isn't created equal. And I'm not especially clear as to whether Mr. Griffin looks at the valuations of an NVIDIA, for example, and says, well, that looks a little out of hand. It reminds me of late 90s activity before the dot-com bust happened, as much as he looks at other names which have gone, you know, parabolic and they're related to AI. And that's where he says, whoa, 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 whoa. We're placing way too many bets on what might happen in the future. We think we know what's going to happen in the future as it relates to NVIDIA and some of the other hyperscalers, but it's a whole host of other names that have literally ripped over the last 3 months, at least, that might bring investors a little bit of pause.
I think that's correct, Scott. There's a difference between a company being scarce in the public market. Like, let's say there's an IPO of a company and it's the only way for you to get exposure, versus that company being truly scarce to the ecosystem. So I do think investors have to discern, is this company going up a lot because this is the only name out of a possible bevy of private companies, or is this the company truly unique and one that is so scarce, I got to give it the N=1 valuation?
I mean, I think he looks also at a stat like JP Morgan Asset Management's Michael Sembelis brought to us today from his report. And he's good at what he does, okay? Quote, AI-related stocks have accounted for 75% of S&P 500 returns, 80% of earnings growth, and 90% of capital spending growth since ChatGPT launched in November of 2022. Now, some would say, well, obviously, and all of that might be justified, but those are large numbers. Those are really large numbers that have carried a boatload of the weight of this move in the market since then.
Yeah, and that's a moment in time, Scott. I mean, just to give some perspective, NVIDIA is about 8% of the S&P 500 market cap weight, but it is also 7% of the earnings. So it's not necessarily distorting equity valuations. And in terms of what companies are excited about, you know, if companies are saying that AI is something where they're actually allocating capital, and many are, of course, are seeing productive gains, I think it's justified that that would be what you'd expect to be the first wave of investment and spending, is around directly into the ecosystem. But of course, over time, we'd expect that spending then to deliver productivity gains and other benefits. So that means if AI, and you know, I'm comfortable with the idea it's a super cycle, we should see a broadening of the benefits and then also the broadening of opportunities over time. So it's probably a moment in time makes sense, but it should be broadening.
I mean, I look at a stock like Oracle, for example, only to pick it out because it's up more than 30% this month. Now, it obviously had the moment around earnings where it added such a tremendous amount of market cap after that event. I bring it up if only because it was initiated sell today at one firm on Wall Street, in part because they suggest that you've got some really aggressive assumptions that are coming with this stock. Now, it's down 5% today because a lot of these names in what you would consider the momentum basket have rolled over a little bit. But the notion that the assumptions are so big that there's inherent risk in and of itself within that.
Scott, I think that there is going to be moments where it feels like we're possibly topping, and today is coming at a time when we have this Oracle report and stocks are generally soft. But number one, I think it's always really healthy to see corrections in a super cycle. But I do think it's really difficult for someone to actually ring the bell at the top. And in fact,
of course,
whether we take like if we look at Palantir or Tesla or NVIDIA, I think that there have been, 25 bell rings at the top at every waypoint along the way. To me, I think the real test is going to be that we see a day where investors are convinced there's absolutely nothing that is wrong with the thesis and it's bulletproof, and yet stocks make announcements and they go down and companies actually have negative returns. I have not seen that yet. In fact, to me, it's reflexive to see that every time markets flatten out after posting gains, we have a lot of people declaring the top. To me, that's a really healthy sign that there is very little conviction about this bull market, and I do think it's healthy to actually see the skepticism. So I'm not opposed to seeing these reports, but it's healthy.
Do you think that equities are especially vulnerable here, as we wrote in our intro today, as BTIG suggests they are? The most since the April low. Do you feel the same? I should also mention it comes within the same context of commentary recently from the Fed chair, who didn't go out of his way when he answered the question about the equity markets to suggest it's wildly overvalued. But nonetheless, he did say that stocks are fairly highly valued. He could have said, I think they're fairly valued. He didn't. He said they're fairly highly valued when he answered that question. You put that into the mix, too, when you consider your answer.
Yes. Well, I have a lot of respect for Fed Chair Powell, but I don't remember the last time any FOMC member actually said stocks are attractively valued, because I don't think it's their job to comment on equity valuations that way. And if we think about where, again, market valuations are, I'd be very concerned if the most important stock, like NVIDIA, was trading at a multiple that couldn't deliver returns. But it's the most important company in the world, 40% plus revenue growth. It's trading at 26 times forward earnings, which is hardly demanding for a company that makes a product that every single company in the world that is involved with AI actually needs. They can't replace it with anything else. So I don't think it's expensive. When you ask about April lows and valuation vulnerability, I think there's really two big differences. One is monetary policy was actually quite tight in April, and the risk was actually the Fed wouldn't even consider intervening, and yet markets managed to stage a 30% rally. Today, we have a Fed that's not necessarily pounding the table that it's in a dovish cycle, but they've understood that they need to now use their hand to support employment. That's a sea change, actually. And as we know, ISM's been below 50 for 31 months. It's the longest stretch in the history of the ISM index. I think if the ISM breaks above 50, that's a recovery in confidence in capital spending. That would support a broadening of the economy, and I think that would be good for equities.
Well, speaking of Fed policy, and you stay with me, Tom, for a moment, Ken Griffin also gave his outlook today for what he thinks the Fed will do after cutting rates last week. The billionaire investor said he sees only one cut over the remainder of this year, outside chance of two, as inflation remains higher than the Fed's target of 2% and may still get worse.
The belief is that the inflationary impulse from tariffs has only passed about 50% through to the economy at this point in time.
So you see it coming, tariff
it's
inflation?
still coming. It's still coming.
It's still coming, he said. He also weighed in on the issue of Fed independence. Listen.
If I were the president, I would let the Fed do their job, and I would let the Fed have as much perceived and real independence as possible, because the Fed often has to make choices that are pretty painful to make. And if the president's perceived as being in control of the Fed, then what happens when those painful choices have to be made?
Is still with us. Let's wrap this, Tom, with your reaction to a little bit of what Ken Griffin said. If he's right, and we have one cut for the remainder of the year, and that in his words, it's coming, about inflation from tariffs, would your forecast for this market be wrong?
Scott, if the Fed does one cut, I think that markets would interpret that in a good way, in the sense that they'd rather see the Fed cutting into a strong economy rather than weak. So I don't think that that's necessarily a negative. But I think one thing that needs to be clarified, because I'm listening both carefully to what Nick said and what Ken said about inflation coming, there is this idea, and Fed Chair Powell talked about it, which is that there's the imputed effect of tariffs coming because these tariff costs have been absorbed and now they're working their way to the consumer. That's what the Fed would call an imputed inflation rate. You know, that the effect was already felt, the charges are in place, but it takes a while for it to show up in a statistical way. That was exactly what happened with the housing prices, that housing prices surged in 2021 and 2022, but it became imputed inflation in 2023. We know that the Fed was lagging in its easing because of that imputed shelter inflation, but the reality is they should have been easing sooner, maybe not 50 initially. And so I think that we have to be careful. When the Fed's talking about that imputed effect, it doesn't mean we have to start a new hiking cycle just because it takes a while to show up. And I think that's why markets are going to see through that.
Tom, we'll see you soon. Thanks for being with us through our A block. That's Tom Lee.
Hey everybody, welcome to Blue Cloud Trading. I'm George. We just saw a clip of Tom Lee from yesterday. He was on Closing Bell on Thursday, and today it's Friday, September 26. As you can see here, 3:32 p.m. Market has not closed yet. And what I'm going to do in this video is we're going to basically just take a quick look at the markets right now before the market closes, and then we'll take a look at some of the stocks that they talked about on the show. We'll even take a look at Tom Lee's ETF, the Granny, GRNY. We're going to look at, let's see here. I think we're going to look at the country ETFs today. And you can see the list over here of stocks that we're going to look at. INTC, PLTR, XLK, QCOM, and GRNY. So let's first, take a look at the markets and what is going on so far. You can see the Dow this morning. It actually gapped up. Now, yesterday I made a prediction that we would have, in fact, an up day. And how did I make that prediction? Using candlesticks, Japanese candlesticks. If we look at the S&P 500, the SPY ETF here, even if you were watching yesterday's video, you probably noted, remember me mentioning how we've got this very bullish candle here, and expect price to probably pop above the Tenkan-sen. Guess what? That's exactly what happened today. So that is some good news, and all the indices were up. So Dow was up 0.68%, as you can see right there. NASDAQ was up 0.36. The S&P 500 was up 0.54%, and the Russell 2000 up 0.79. It was actually up the most. So that's some good news. And if we look at the heat map here, let's just see what's going on so far. You can see the majority of the stocks are up, except for a few, like Oracle was down, Costco was down 2.5. Meta down 1.15 so far. AMD is down 1.46. So let's get into the stocks that he talked about. So Intel, these are stocks that popped up on the screen. I thought, hey, why not just do some quick analysis using the Ichimoku indicator. Look at Intel. It is still moving up. And I did actually cover it yesterday too. It's very bullish here. It popped above that high right there yesterday on Thursday, and you can see it moved up some more. Now we've got a little bit of a reversal candle here. We've got a spinning top. So I don't know what it's going to look like on Monday. Will we able to get above, if we can get pricing on Monday, get above the high of that spinning top candle, then I expect it to continue moving up, and it's probably going to find resistance at 40.57. That is based on these prior levels over here. Okay, so INTC looking good, but it is getting a little bit extended above the moving averages, as you can see. How about PLTR? And by the way, guys, we're using Ichimoku. We want price to be above the 2 moving averages, above the Ichimoku cloud. We want that ADX to be moving up, positive DI above the negative DI. That represents the momentum is increasing. You can see the volume here is all positive, so it does look pretty bullish. Palantir, all right, is just kind of moving sideways right now. It's just got this little consolidation box that it's building right here. If it can break above these little highs right here, I think then we can see an expansion to the upside. It will probably find some resistance around that level too, though, that prior high. So that's the thing I'd be watching. Let's see, what is that high right there? It's about 190. Okay, so watch the 190 level of PLTR. All right, let's take a look at XLK. XLK looks pretty good. We've got, yesterday, the XLK ETF pulled back, found support at the 9 period, that green line right there. All right, and then bounced off of that, up 0.25%. I think we're going to see a continuation on Monday, unless some crazy negative news pop out. You never know, right? They come out sometimes. Here's QCOM. That one pulled back. It's down 0.06%, but it is holding up above the moving averages. Now, one of the things I like to do is I like to review these stocks before I start analyzing them, and then I'll give them a blue check if that little blue flag that you see right there, they get that if they look positive on both the daily time frame and on the weekly. Now, it does look very bullish here on the daily chart. You've got a future bullish cloud. That's when you have the Senko span A, that light colored blue line above the Senko span B. That's very bullish. We've got the ADX moving up. Positive DI is above negative DI. And the Chiku span here, which is the closing price in a line form projected 26 periods ago, that's above price 26, the candle 26 periods ago. Hence, it is a bullish chart that we're looking at. Very strong bullish trend, essentially. We also have that dotted yellow line that you see right there. That's the 200-day moving average. We're above that. The problem is with QCOM. If we switch it over to a longer or higher time frame, the weekly chart, you can see what's happening here. We are currently inside the Ichimoku cloud. That basically tells us, okay, at least for me, I won't add a new position in my portfolio unless price is above the cloud on both the weekly and the daily. So right now, you can see that it's probably going to find resistance around this area. You can see, in fact, that it kind of did almost. That type of candle is called a shooting star, and it looks like it's stalling, and it's down 0.05% here. So let's look at that. That's the weekly chart. Let's look at the daily chart. See it just pulling back. So yeah, I would hold off on QCOM basically. All right, now let's look at Granny. Fundstrat Granny Shots, U.S. large cap. This is Tom Lee's ETF. We had this long extended box here that it broke out of back here on, again, September 10th. It took off, pulled back a little bit. Now you can see we've got a couple of reversal candles, right? We had one yesterday. So after you see a pullback, after a drop, if you see that type of candle, which is called a spinning top, okay, or doji, if the price of the opening price and closing price is very close, and you've got a wick on the top and a wick on the bottom, and it looks like a spinning top almost, then expect potential move up. Now it did move up 0.41%, but the thing with the GRNY is it stalled right at that level right there. The green line is the 9 period, takes the highs, the lows of the last 9 periods, divides it by 2, and that's how that line is plotted. That's why sometimes you'll notice it flatten out. Just like in the 26 period is the red line, okay? Highs and lows divided by 2. And right now it's stalling. So I'd hold off on Granny. But if it gets above next week on Monday, then I think it's going to be looking a lot more bullish. Let's look at the weekly chart for Granny. You can see that it is above the Tenkan-sen and Kijun-sen. The cloud is bullish in the future. And, this ETF is relatively new. Came out on November 7th of 2024. But it seems to be doing okay this year so far. From the lows of April, it's already up 65%. But, if we go to January 3rd, let's go to January 3rd, we'd have to go to January 3rd right here. The opening price, it's up about 23% this year so far, since January 23rd. All right, let's look at the country ETFs real quick here. I don't do that too often, but we should check out how the country's doing. I've already reviewed them, and these are the strongest ones. Where they've got the blue flag here. EWU, as you can see, is in a nice strong uptrend here on both the weekly chart and on the daily. EWI is Italy. Okay, so Italy is above the Tenkan Kijinsen. It's pulled back, and now it's starting to show some strength again. Up 1.16%. Here's the weekly chart for you. Here's EWQ. This is France. So for those of you who want to invest in France, this is one way to do it. It is in the consolidation area here on the weekly chart, on the daily chart as well. So basically, but it did pop above. It gave us a nice buy signal actually right there. EWC. Canada, actually, this one is not above the Tenkan. I'm sorry, I should take that one out. I missed that. EZA, on the other hand, South Africa. Yes, that one does look very bullish. It popped today up 2.48%. That's the daily chart, and here's the weekly. So you can see that very strong uptrend. EWM. Now, this one here, this is Malaysia, okay? So EWM, Malaysia Index Fund. This one, we've got basically the Senko Span A just crossed above the Senko Span B. That happened today. And this is a weekly candle. It's up 1.86%. ADX is moving up. That's the white line right there. That represents momentum increasing. Positive DI is above negative DI. We've got the 9 setting. Okay, it's a little faster than the traditional setting. And the volume's increasing. I do like Malaysia. All right. EW, and let's look at this one on the daily chart. There's the daily. You can see after that pullback right there, it has popped. Okay. EWP is Spain. This one too, popping above the 9 period once again. And usually good things happen when price is above the moving averages and above the cloud. Okay, like it was over here. You can see the big move there. It was about a 9% move in 18 days. I mean, ever since it's been above the Ichimoku cloud, things have been very bullish. You go back in time, though, I'm sure there's been some times where things were not so great. We'll take a look at this time frame, 2022. And if we switch it to a weekly chart, you can see here how that extended period between it was like mid 2021 here to mid 2022. If we measure from that point, say, all the way down to that low, that's a 37% drop. Things started to go negative here when price closed under the 9 period. That's the first sign of weakness, right? After, because as long as price, like I said, is above the moving averages, things are good. The second things start to sometimes deteriorate when price gets under the Tenkan. Not always. They can recover very quickly, but in this case, as you can see, that that's the date from June 18th, 2021. It basically stayed under the Kijinsen, the red line there, and the cloud until this point right here of October 14th. We're talking about 1.3 years where Spain was dropping. It dropped 33.44%. Now, since then, a nice recovery here, you can see from that point. Let me switch it to a monthly chart. Maybe it'll be easier to measure. So from that low point right there, it's moved up 149.54% right there in approximately 2.9 years. And you can see right there where I have the little arrow, that's when it popped above the cloud. So that gave us a new buy signal right there, basically. Or you could have waited for price also to get the Tenkan to cross over the Kijinsen. But hypothetically, just getting above the Ichimoku cloud from that point, it moved up 77.54% on the monthly chart. All right, so very, very bullish. EWN is the Netherlands. How are they doing? They are looking quite bullish here. Here's the weekly chart. All right, very nice. And here is the thing with the weekly chart here. We do have a doji type candle forming this week. So that is, typically a reversal candle after a move up. So maybe next week things might pull back a little bit. Here's a daily chart. I mean, it looks like we had that pullback here from Tuesday, right? So pulled back, and now it's showing strength again. So I don't know. I'd want to wait and see what happens on Monday with this one. Maybe it will continue its direction to the upside here. And then EPU is Peru. Here's the daily chart, very bullish. Look at this. This is exactly what you're looking for. Here's the weekly chart. These purple lines are monthly levels. They go back all the way to, look at this, folks. This goes all the way back to 2010. So we broke those 2010 levels, right? That just happened last month in August. And now it's off to the races here because Peru was kind of consolidating for all these years. Think about that. That's a long time, 15 years in this range, basically. All right, and now, these countries are doing pretty well. It's breaking out basically on the monthly. Here's the weekly. Here's the daily. Very, very strong uptrend for Peru. All right, and I did review the other ones, not as strong, so I'm not going to go into those other country ETFs, but I want to thank everyone who has become a member and who subscribes to the channel. Guys, all you need to do is hit that subscribe button here on my homepage. Click the notification bell. If you do want to get access to the member-only videos that I produce every weekend, I'll be putting out another one this weekend. Definitely click this button. Right next to the subscribe button, you'll see the join button. They brought the join button back. You click on that. This will pop up. You can support this channel by becoming a Blue Cloud supporter. All right. Under this level, you can request a stock or ETF be analyzed in an upcoming video. Under Blue Cloud Trader, okay, that's the next level up. This is where you'll have access to those exclusive member-only videos. You can go back in time and watch all the videos that I've recorded. And then Blue Cloud Legend level membership, you'll get those member videos. You'll also be able to request 3 stocks or ETFs be analyzed. You'll have access to some of my day trading videos that I've recorded in the past. And you'll get daily trade updates. I think that's the most important part because I do share all the trades that I place each day. So you can see how my performance is going each week, and also when I do a summary of all the trades that I place throughout the week. And I also provide 20 new stock ideas for the upcoming week as well. All right, guys. So, by the way, I will be coming out with a second video later today, so look out for that. You find it right here on YouTube. Make sure you hit the subscribe button and notification bell so you get that information. All right, guys. I'll catch you all in the next one.